ASML is the first big semiconductor company that has reported its latest earnings report. Stock was down 7%. Now, if you look at all the other semiconductor stocks during that day, they were all down by quite a lot. Could be because of ASML's report, could also be because of China, because there was a report that China will start making a lot more chips, which could mean that they might flood the market with a lot of semiconductors that might be cheaper. Just like with EVs, they're flooding the market with cheap EVs. They might do the same with semiconductor chips. Of course, might be good for the consumer, but then again, I'm pretty sure a lot of countries will have restrictions when it comes to having semiconductors that are made in China in their own devices. But that's also the reason why China has been pushing to make and increase the chip production in-house. Well, in-house. In country, that's because of all the restrictions that have been put on the company. Makes sense. Now, if we look at ASML, during that day, stock was down 7%, has a market cap of $354.34 billion, now a forward PE of 37.7 times, EV to sales 10.8 times, EV to EBITDA 29.6 times. Now, if you look at the analyst estimates for fiscal year 2024, and this is where things get a bit interesting. The estimates for this year are that sales decreased 3% year over year and EPS decreases 7.8% year over year. But what happens after that? Fiscal year 2025, sales reaccelerate 28% year over year and EPS increases by close to 53% year over year, followed by 10.4% growth year over year in sales in fiscal year 2026 and 16.13% growth year over year with regards to EPS. So now that we know what analysts were expecting and are expecting, let's have a quick look at what ASML CEO said. Our first quarter total sales came in at 5.3 billion euros at the midpoint of our guidance with a gross margin of 51%, which is above guidance, primarily driven by product mix and one-offs. Very important here, primarily driven by product mix and one-offs, because you will see later on why the market reacted the way it did. They say here they expect second quarter total sales between 5.7 billion euros and 6.2 billion euros with a gross margin between 50 to 51%. ASML expects R&D costs of around 1 billion euros and SG&A costs of around 295 million euros. And now listen very, very closely. Our outlook for the full year 2024 is unchanged, with the second half of the year expected to be stronger than the first half, in line with the industry's continued recovery from the downturn. We see 2024 as a transition year with continued investment in both capacity ramp and technology to be ready for the turn in the cycle. And by the way, they increased the dividend payout. They also said that they repurchased around 400 million euros worth of shares under the current 2022 and 2025 share buyback program. So the headline numbers came in as expected for a company. But the market, which already, as we've seen, analysts were already expecting fiscal year 2024 to be a down year. And yet, stock gets hit by 7% because it basically missed on the estimates. Now, let's have a look at what they said 3 months ago in the other earnings call. They say here, we saw a very strong order intake in the fourth quarter in support of future demand. To be able to follow the curve of the industry recovery, we are looking at the combined demand for 2024 and 2025. As mentioned last quarter, so 2 quarters ago, we fueled 2024 as a transition year in preparation with the expected strong demand in 2025. We therefore continue to make investments this year, both in capacity ramp and in technology to be ready for the upturn in the cycle. While we see some positive signs of recovery, we feel it might be a bit too early to change our perhaps conservative view as communicated last quarter and therefore still stay with our previously communicated expectations of 2024 revenue to be similar to 2023. Which again, if you follow the company on this channel, you were not surprised by these results. But if you suddenly just looked at the headlines, then yes, maybe you would be asking quite a lot of questions. But if you follow the company, this is why it's important to follow the company, to look at the earnings reports, to listen to the earnings call, or even better, read the transcript, so you follow the company better and you understand what actually happens. That's why I do what I do. We're going to cover quite a lot of companies during this earnings season. So if you like these types of videos, leave it a thumbs up, subscribe if you have not. Would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get a top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, let's get back and look at these numbers. So, Q1 net sales came in at 5.3 billion euros, gross margin 51%, net income of 1.2 billion euros. Quarterly net bookings in Q1 were 3.6 billion euros, of which 656 million euros is EUV. Now, of course, if you look at the number, you compare it year over year, which again, you shouldn't really do because this is a type of business, if you've been following the company for a while, where you can have some volatility quarter over quarter. One specific quarter basically tells you literally nothing about what the company and how this industry is doing. So just for the sake of the video, new lithography systems, obviously way less than last year. Used lithography systems, also way less, but that's always a smaller number. Net bookings down by quite a lot year over year. Then if we look at the net system sales breakdown, so we've got here by region, which of course is also something to keep an eye on because 49% is from China, only 6% from USA, 19% South Korea, 6% Taiwan, and then the rest 20% here is Europe, Middle East, Asia. As for end use, 37% memory, 63% logic, which is a bit of the same last year. And with regards to the regions, last year, same quarter, 39% were for China, now it's 49%. You had 25% last year South Korea, 13% Taiwan, now it's only 6% Taiwan and 19% South Korea. So definitely something to keep an eye on. Now, just to show you, right? Just to show you, to point out that just looking at one quarter doesn't make much sense. If you look at net bookings, yeah? Q1 2023, 3.75 billion euros. Q2, 4.5 billion euros. Then suddenly 2.6 billion euros in Q3, then a huge jump, 9.1 billion euros in Q4, and now a drop again, 3.61. So as you can see, you could have made a conclusion, right, by Q3, oh, horrible company is going down, you don't have to buy this. But then one quarter later, a huge explosion there. So yeah, like I said, look at the full picture. And the full picture will show you that this is one of the most important companies in the semiconductor ecosystem, if not one of the most important companies on this planet. Look at what will happen in the future. Do you think that we will need more semiconductors, or do you think that we will need less semiconductors? I think we're going to need way more semiconductors, not just for your phone, not just for your PC, but for basically everything we interact with in our daily lives. And to make more of those semiconductor chips, you will need products, devices, huge machines that ASML makes. So basically, here you're buying the picks and shovels for the success, the future of the semiconductor ecosystem. So no, I don't think ASML is going away anytime soon. I think you should be enjoying the dip. Now, if we look at the stock right now, it is true that it is a bit in no man's land. On the weekly here, it's under the 50 and the 20-day moving average. Would be very interesting to see if we can get a bit closer to the 200-day one, which sits very close to $800. Of course, previous weeks we were a bit overbought, just like a lot of other stocks out there, but I do think that right now there is some bearish sentiment around semiconductor companies. We've talked about Intel, we've talked about AMD. So yeah, maybe an opportunity could arise here if it drops close to $800. Would you be a buyer if it drops to $800? Let me know down in the comment section below. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.